Share Shootout brought to you by Lion of Africa Insurance, insuring South Africa's future.
You're watching the most ferocious, backbiting, downright nasty stock picking show on television, I hope. Although we've got two of the nicest guys on the show this evening. I'm Bruce Whitfield, this is Share Shootout League. Welcome to CNBC Africa, first in business worldwide. Now, if the South African automotive industry's been colluding to fix prices since 2000, why stop them now? They were just getting on a roll. And Annie Devani's lawyers, are they following the Barry Rue program on how to beat a murder charge? And if SARS was bugging Jacob Zuma's house in 2007 while he was deputy president of the ANC, should Cyril Ramaphosa be on the lookout? But could the NIA even get over the walls in Sandhurst, one wonders? We offer absolutely no answers for these vexing questions. All we know, the Share Shootout League has got fewer games to go and the battle for points intensifies. Just check out the results and see how Twitter has decided the match between One and Value Guy. Nick, the Value Guy, is wiping the floor with his league. He is now the first player to reach 15 points. We've got Sasha, who's Bucks, and Gary running dog on 12. We've got the Scott on 9. Sid is on 6 and still in with a chance as well. Of course, Value Guy, I think it's going to be hard to deny him one of the top 4 spots on the log. Unfortunately for the One, he's got a sinking feeling. Reality is fast creeping in. With 3 matches left, he's got to win all of those 3 matches to have a chance at a top 4 finish. Stranger things have happened. But look at the bottom. There you've got Nao, the One, and you've also got these guys over here. Mathew, Shootout, he's coming into play today on 3 points. Clive Ramathibela-Smith on 6 points. Maybe he has got a chance of playing this game and getting through to that final 4. Remember, it's absolutely you who decides the results of this match and indeed the results of the league. All you have to do is follow at SSO League and tweet any of the stock pickers hashtags. It's as easy as bugging a politician's house. But just don't get caught. Back on tonight's match, the first stock picker has a whole management firm actively help him secure the 4th spot on the log. Another who's only ever won his first game. I'll give you the players. They're a bit of a sad lot, really.
My name is Clive Ramathibela-Smith and I am the Chief Investment Officer of Inkunzi Investments. My investment philosophy is keeping to the fundamentals of investing, so keeping it simple and straightforward. Stick to the basics and make sure that you create phenomenal traction from that. My game plan for the league is to make fun of everybody else and make sure that they get embarrassed at the end of the show so that I can win simply because I get public preference. My biggest competition in the show, and it has nothing to do with investment philosophy at all, it would be Gary, simply because he's tall and big and I'm terrified of him. I don't stand a chance. I'm going to win the league because I feel that I've got the right criteria and the right material to make sure that I win the league. I qualify better on the BE scorecard, so I hope that will help.
It's Mathew Warren, and I'm head of financials and retailers here at First Avenue and a partner as well. So what we do is we do intrinsic value investing, and so we seek out high quality companies at a discount to fair value. And that's really, it's that combination that we're always looking for the best combination possible to put that into the portfolio. I think, if anything, just keep it simple. So get to the main points, get to them quickly so that people can understand where I'm coming from and think on my feet from there. Oh, I don't know, I'm new to this, so I guess I must just bring my A game and see what happens. I'll give it my best shot, certainly. Stock pitch is always a good way to get your thoughts out quickly and efficiently. We have to do that in the shop here, so why not do it for the benefit of the viewers?
William Shakespeare wrote comedies, he wrote dramas, he also wrote tragedies. Tonight has got the sense of a Shakespearean tragedy about us because we're bottom feeding this evening. Both Clive Ramathibela-Smith, Kayli from Inkunzi Investments, and Mathew Warren, Shootout from First Avenue Investment Management occupy 6th and 8th spot, respectively, on the log. You can't go much lower than that. Kayli is looking for 3 points to put himself on an even keel with the Scott in 4th spot. And as for Shootout, he's going to need a small miracle, well, actually quite a big miracle. But first, the house rules. Both of these players have pre-picked 3 shares. Only I know what they hold, and they know what they hold respectively, of course, unless they change their minds. But each player must accept at least one of the other players' shares. Each has got 30 seconds to argue their stock pick. They choose from the JSE. We give them an offshore allowance as well. They're allowed 1 international stock per round. Those are the rules. We've got those out of the way. And now we're ready for a scrap. Let's man up, gentlemen, and have a mean and dirty fight. You can hit each other if you like. I'm here simply to watch.
I'm not the violent type.
Okay, because you're wearing a pink tie, and because you're not very tall, and because your laugh has become nationally famous. That one, exactly. I knew he would. He would oblige. He's terribly obliging. I'm going to make you, Clive Ramathibela-Smith, go first. I like your first pick.
Yeah.
I'm thinking about this company a lot. It is a holding company. It's an investment holding company. It's based in Stellenbosch. It speaks a language that Mathew doesn't understand at the office, but at least the results come in English and in numbers. The numbers are good, recently coming out with some fairly spectacular results. Earnings up 31%, the dividend out of PSG up 28%. What is there not to like in 30 seconds?
There's not much not to like. The first and foremost, I like the grooming structure, which has been the working capital that they've actually comprised of. So if you think about an incubator, if you'd like to call it, but the financial services side has been to the point, and they understand their clients. They're very client-centric, and they're very close to their base. And as well, if you look at their other small businesses, if you look at Zeerder, for example, as an example, in Curo, they're in education, they're in agriculture. And then obviously you've got the Capitec bundle, which is also fantastic.
There we go.
Lovely company.
Lovely company. You got to like PSG. Hey, Mathew?
You can't argue with the history. The historical...
I'm feeling a butt coming in.
Yeah, the historical returns are phenomenal. Great capital allocation. I pitched Capitec short the other day, so that's not working for me just yet, but I'm not
because
a big,
Capitec, since you pitched it short, has gone up to $270
That's
or
the thing.
thereabouts.
That's the problem.
Chairman and FD are selling stock at these levels, and it might give you a hint about what's coming next. But
it may very well, but we've seen directors of companies sell shares in the past, and the share keeps on going up. Capitec at 270 Rand makes up about 20% of the PSG portfolio, thereabouts, between 20 and 25%. Is there too much Capitec in PSG to make you comfortable? If you want to be consistent, you've got to shoot it down.
Yeah, no, I would shoot it down. I wouldn't want to own Capitec at these levels. It's priced like these are sustainable earnings. I think the whole industry is going to shrink further.
I mean, you talk to Pete Maton, and Pete Maton tells you that they've got enough within the PSG stable to keep growing earnings at similar levels to what they're doing now for the next 5 years, at least. Plus, then they've got private equity business of PSG, and in there is the little engine room of potential future growth. That doesn't excite you?
I think some of the other companies in the stable are great, actually. Good futures. Curo could be much bigger if you look out 10 years. So, yeah, it's just really the one piece that I'm not a fan of, but otherwise, there's a lot of good companies in there.
I mean, when you look at it, Clive, I mean, Curo, when PSG bought a stake in Curo, controlling stake in Curo, it had 3 schools. By the start of the academic year next year, they will have 40 schools, and the chief executive maintains right now there's room in the market for more than 100 Curo schools. There is enough appetite by South Africans to put their children into some form of private schooling, either the more mass market private schooling or at the top end into more expensive schools.
It's what South African education system has given opportunity to these guys. And what's important is that as the growing middle class continues to grow, obviously, you will see more and more people trying to get into private institutions, private education. They're planning another 10 schools by the end of 2015, like you just mentioned now. So the idea is to grow that number of schools. And the nice thing is that they do a credit check on you before they actually allow your kid to go in there. So they know that they can trust that you will be able to pay the school fees.
Oh, well, that's you. I didn't know they did credit checks. I suppose they use the Capitec model and impose it on the school. And
there you go.
If you're in there. But the risk that Mathew points out, though, and that is the micro-lending risk. We're hearing the bubble worries. First Rand saying it doesn't believe that we're in crisis mode yet following African Bank's demise and the curatorship of African Bank. Yet we look at Capitec, which has shrugged off all of those issues. It turns down 7 out of 10 people who walk through its doors asking for a loan. It seems to have very good checks and balances.
And that's the thing, if you put right regulations, you put right policies, and you have a strong management team that understands the business that you're in, then it's much easier for you to actually do those returns.
Are we going to change your mind on this one, Mathew Warren?
No, it's not a share I would put money into myself.
There we go. You're shutting it down.
You should put the money in this show then.
There we go. You're shot down, I'm afraid.
I am.
Despite the pink tie you put on. More preppy, I went to a school that had a tie just like that one. Didn't like it very much, so that's -2 points for you. I'm interested, Mathew Warren, from First Avenue Investment Management, in your first pick. You call it CME Group. Yeah. Could this be from your hometown?
It is.
Could it be the Chicago Metals Exchange?
Mercantile, yes.
Mercantile Exchange,
Yes.
I beg your pardon. In 30 seconds, tell me why you like it.
Yeah, so this is basically a network effect. It's a derivatives exchange, and they specialize in futures. They have the only futures on the S&P, which is a great franchise. They do their own clearing. So if you trade there, you have to clear there, which keeps all the volume on exchange and creates that network effect. The operating margins are in the 60s. If you take out the goodwill from some of the strategic acquisitions, it's got a great return on capital. It's not so great otherwise, but the cash flow is tremendous. They do special dividends every year based on how much cash is left after the regular dividend. Great company.
What happened to the value of the Chicago Mercantile Exchange in 2008?
Yeah. I don't recall actually that particular.
It didn't hurt enough. I just wonder because if we are, as markets suggest at the moment, we may be going into another global slowdown.
Sure.
Oil prices are reflecting it. Gold prices beginning to move up. Fears of inflation coming through there. Markets have pulled back significantly. Volumes on even derivatives exchanges have got to come under a huge amount of pressure.
You know, it depends. I mean, if the speculative appetite comes down, then the volumes can come off. At the same time, there's a lot of hedging that takes place through this vehicle. So if you're protecting against rates, against the S&P, which a lot of people are interested in protecting against rates at this stage, you can get more activity on the one front and less on the other. Volumes have been pretty flat to down, but they get pricing every year. Overall, it's a good business. They might also get more business from the over-the-counter clearing on their own mechanism.
Okay. Clive, do you like the Chicago Mercantile Exchange?
The greatest team to ever come out of Chicago is Chicago Bulls, and you know what's happened to them. You know, they're
and Mathew Warren comes out of, and look where he is in the league.
And look where he is.
Good
now.
point.
So
Good point.
I'm very sorry. This is not a slam dunk for me, I'm afraid.
Barack Obama comes. Oh yeah, good point.
So please, let's not kid ourselves. I would have heard something of that nature if there was any value to find out about it, but I think it belongs there in Chicago.
Okay, belongs in Chicago.
Yeah.
His kind of town, not yours.
Yeah,
Okay.
Chi-town.
I think we're going to just skip ahead and save everybody the pain, Mathew Warren. You're shot down. Let's spend a little bit more time on some of the other picks. Chi-town is shot down on every single front, except Oprah. Like Oprah. Okay, let's move on then to your next pick, Clive Ramathibela-Smith from Inkunzi. It's another. I think you've shot this one down before, Mathew Warren. If my memory serves, it's a valuation problem from your perspective. It's a bitter pill to swallow, but Aspen, what a joy, what a happiness. Do they make happy pills?
I don't know.
They don't sell that kind of drug. In 30 seconds, tell me why.
The reason why I've loved Aspen for a while now is the strategic movement into other emerging markets. Right now they're talking about a deal with Japan to enter the Asian market, which is quite exciting. And hopefully they can compete against drug producers in India and in China, which we've been struggling to do. And so these guys are well strategically positioned to do that. And I think that's a great prospect to have a look into. Despite that, their South African contracts are very strong and solid, and I'm looking at another 25 years that they will continue to provide us with medicine.
There we go, medicine better than drugs. So they're big in South Africa, they're big in Australia.
Yeah.
Will they, Mathew Warren, be big in Japan? I had to use it.
Yeah, they have that partnership with GSK, which is one of the best things they have going for them. So a lot of the stuff that GSK, it's slowing, they like to get it out of their portfolio and into Aspen. So that partnership's very fruitful for them, and now they're going to extend that into Japan. They have a huge facility in PE that has a lot of room to grow. And as they grow volumes through there, the asset turns are going to increase, the unit costs are going to come down. Big fan of Aspen, actually.
I thought you'd shot it down recently based on the
Mediclinic
valuation.
you're thinking of, I think.
Pardon?
Mediclinic was the
Mediclinic
one.
probably. I mean, yeah, hospitals, drugs, all the same. But here Aspen is an interesting call because you are a value house. You like to look at value. One looks at Aspen Pharmacare, and on a traditional valuation methodology, you're looking at 30 to 35 times last year's profits that you're expected to pay to buy shares in that company today.
Yeah.
How does that sit with the valuation methodology that you use?
We're intrinsic value investors, so we do discounted cash flow modeling, which you have to with a company like Aspen. If you use shorthand metrics, you'll never understand what the company's actually worth. But the way they've grown over time, the way they've done acquisitions, added value to those acquisitions, improving the margins, consolidating plants, extending their geographic footprint in terms of sales. It's a great company. If you don't look into the future, you'll never understand what it's worth. It's a very valuable company.
Okay, so we talk about it being very valuable. What is it worth over 10 years. If we're going to take a 10-year view on this company, and let's be sensible and let's be grown up about this, you were talking about a 25-year pipeline of drugs.
Yeah.
The drugs industry is one, the medical industry is one that has consolidated a lot. Let's assume that Aspen can stay as an independent, trading at nearly 400 Rand a share right now. Does it go up 10 times from here in 10 years?
Why not? If you backtested 10 years ago where they were sitting and what they've been able to do to quadruple those rates. So that means that there's no stopping them to do the same in the next 10 years.
As Mathew Warren, however, pointed out, their history is very nice. PSG, their history is very nice. You said we can't rely on history, however, to give us a picture of the future. What makes the last 10 years of Aspen's history indicative of what comes in the future versus PSG's last 10 years and what's indicative of their future, Mathew?
I think the acquisitions, they're going to have to keep finding them to replicate history, because that's part of what has gone so well. Stephen Saad has been a great capital allocator.
And he's a youngster as well. I mean, he's in his early 50s.
And he's passionate about the business. If you hear him talk about the business, he'll go on for 2 hours in intricate detail about
That's why
the
he's never been a
business.
guest on this show. He can't keep it tight. Yes.
No, but so if they can find new acquisitions and take cost out and keep expanding geographically, I mean, they really have relatively small market share on a global context. There's a lot of big players out there, some that aren't operated so well. There's room for them to gain share.
Okay, so we got opportunities to gain share. The Indian drugs market is particularly cutthroat. Cipla learned that to its cost, of course. Cipla is a big Indian drugs provider. The Chinese drugs industry is a difficult one as well. But South African companies have broken into India. They've broken into China. Will Aspen do it?
It's the margins question, and if they can create value and produce at a reasonable price, then it's not difficult for them to go into those type of markets. And I think just Japan is the first example of them trying to expand. But not only that, if you think about what Glasgow has done, it's already got some presence in China as well. So who knows what the future holds for this Aspen
Who knows
stock.
what tomorrow holds? It was a song along those lines, but we're not going to sing it. You like it, Mathew Warren? You'll take it.
Yes.
There we go. There we go. I'm surprised by that one, and I'm delighted by that as well. Great pick there this evening, Clive. Aspen Pharmacare, a market cap of 153 billion Rand, and you anticipate it'll be at about 1.5 trillion within the next 10 years. Awesome. Okay, we've got this
Crystal ball.
A crystal ball. Magnificent. It's completely transparent. Okay, Mathew Warren from First Avenue Investment Management. You've used your offshore allowance, but you're staying in the global sphere because you like BHP Billiton. In 30 seconds, after a huge sell-off last week, why is it back in favor?
Yeah, so a little opportunistic on the value. There's a lot of fear around China slowing down. There's a lot of evidence of that. Global commodities are selling off. Billiton has geographic diversification, they have product diversification, they have extremely low cost structure. They're in the bottom quartile on the cost structure across their different minerals and oil and gas. So prices can come down, they actually can grow volumes into that market, while the smaller, more marginal players actually fall out, like the Chinese iron ore producers. You have to appreciate their capital allocation as well. They've done very well on that front.
Yeah, BHP Billiton, it's everybody's favorite. I can't help feeling that there's Mark Kirifani, though, who's got a trick up his sleeve. And people who are picking BHP Billiton consistently, based on the last 10 years of history, may miss out on an Anglo opportunity, Clive, or not?
Saturation. And that's my argument here, is that they've done well, they've had a nice geographical exposure, and they're very much in the lower quartile in terms of costings. But the question is, how far can they grow now going into next future? We're going into a different period now for the next 5 years, Bruce. A contraction, you can see the IMF, you can tell that the guys are actually downscaling growth. So my question is, how do they make sure that they sustain those numbers over the next period of really difficult time for especially the resources companies? Will they be able to sustain themselves? And I can't see how they would be able to do that, especially because asset managers at this point in time start looking for value in other products rather than looking at resources.
At the beginning of this year, however, we're being told we need to go into undervalued resources. The thing that has changed, I suppose, over the last 10 months has been that China has slowed down much more quickly than anybody had anticipated.
Yeah.
Okay, so we're getting out of resources again.
We are getting out of resources, and you can see. I mean, all you have to do is look at the price of gold and look at the price of platinum. And also, what's interesting is the alternatives. So things like silver now all of a sudden start looking like pretty much attractive. And we spoke last time about this palladium, which is another alternative to platinum. That those things becoming more of a favour than the general resources that we're used to.
Okay, so Mathew Warren, he's basically saying you're stupid.
I think if you look at Billiton, really what you get is return on capital that's similar to some of the best U.S. industrial companies, the likes of GE. Rockwell Automation. So, even in a global context, minerals generally is a bad business. Billiton's really the exception. You have to be extremely low on the cost curve to make that exception. They do it.
But that's the point. I mean, the world isn't stopping. The world isn't sort of stopping rotating this way and going counterclockwise. It is, the world will continue talking, will continue turning, consumption will continue. And if you're the best producer of those commodities, Mathew Warren, that's your argument, then you are the best positioned to continue capitalizing from that.
I think so. I mean, they'll be there standing when all the high-cost guys fall away. So they'll have more volumes, more market share. If there's a rough patch, even if China goes backwards, coming out the other side, they would flourish. So, patient shareholder, I think you do well with Billiton.
Clive Ramathibela-Smith, he says you're stupid.
How do you make up for all these shops that they're shutting all over the place? It started in Australia.
Mothballing. They'll open them up again at some point.
Well, I suppose, but it just shows you how much pressure they're under. You know what I mean? So if they're going to be cutting costs by shutting off shops to create revenue, maybe it is a good strategy. I don't know.
Are they under pressure, or are they just being nimble and flexible, being good managers of assets? You can't foresee cycles 10 years hence. You've got to invest for the future. If it doesn't work out, well, you've got to be able to pull back. That's what they're doing right now. That's all responsible.
I suppose it is. But I'm still shooting them down.
You're still shooting him down. All right. Well, I mean, he's not keeping him happy. Who's letting who out, and who will be lucky enough to have their financial wisdom be regarded as good enough for you to vote for them? The second half will answer those questions. We're going to take a break, but just before we do that, let me remind you of where we've gone so far this evening. Clive Ramathibela-Smith from Inkunzi Investments with PSG Group and Aspen Pharmacare. PSG Group, one of the favourites of the JSE for the last 16 years of its existence, is being shot down by Mathew Warren. However, he does like Aspen Pharmacare, and he'll take 2 pills with his breakfast, and has accepted that one. Mathew Warren from First Avenue Investment Management, CME Group, the Chicago Mercantile Exchange. Clive Ramathibela-Smith unkindly maintains nothing good other than Mathew Warren has ever come out of Chicago, so he shot it down. BHP Billiton he shot down as well, which puts Clive under pressure as we go into round 2. This is CNBC Africa, first in business worldwide. You're watching Share Shootout League, the only league in the world that doesn't make it onto the newspaper back pages. I'm Bruce Whitfield, and welcome to Match Day 25, as we're edging closer and closer to the semi-finals. Your votes will change the evening for one of our stock pickers. All you have to do is follow at SSO League, and you vote for either Shytown, who needs your votes desperately. He's not scared to beg, and K-Live, who needs your votes, not as desperately, but he'd like a couple of votes just to boost him up the league just a little bit, because both of them are struggling. Okay, so what we got so far is Clive Ramathibela-Smith with PSG and Aspen. Aspen accepted, PSG shot down. Mathew Warren, CME Group, Chicago Mercantile Exchange shot down. BHP Billiton shot down, which makes it interesting for you, Clive Ramathibela-Smith, as we go into the final picks. Mathew Warren, blow his socks off with some luxury goods, if you wouldn't mind. In 30 seconds, give me Richemont.
Global luxury brands, Cartier on the one side, Van Cleef & Arpels, and several other watches that I can't pronounce on the other side. But they're in the top 10. They're very well represented with these watches globally. What you have is extremely loyal following. You have pricing power. You get to sell around the world, different currencies, different geographies, different economies, up and down. There's fear from China, obviously, and what's going on in Hong Kong. I'm sure it'll pass, or at some period of time, global luxury sales will continue to grow.
The share, however, at $90 is reflecting a considerable change in sentiment. It was nudging 110, came out with results. Johan Rupert, characteristically bearish, coming out. At this time, the market believed him. The share price has pulled back nearly 20% over a matter of weeks. Could be a great buying opportunity, or it could be a time to burn your fingers. Clive, where do you sit?
I think it would be a good idea to buy at this low levels, because we've seen where they've gone. You said just now they've nearly reached 110. I like the fact that, when times are tough, obviously it's become very difficult for the consumer. But I believe that when that cycle changes, then the guys will go back to their well-known brands and not buy the cheaper alternatives.
But what's so interesting about this luxury brand space is no matter how bad a crisis is, there are always a lot of people willing to spend $100,000 on a wristwatch or whatever the case is, the same amount of money on a pen or any kind of other luxury good. Where they've been very clever in growing their markets is that they've made luxury affordable to a middle market. So you can get a Mont Blanc pen for 2,000 Rand. Expensive for a pen, cheap for a status symbol. That's the part of the market, though, that will suffer, won't it, Mathew?
It's not really a strong part of the franchise.
So the aspirational side isn't that important?
No, I really with Richemont, if you look at the breadth of their earnings, it's actually at the very top end. With the jewelry and the watches, are the bulk of the earnings power is at the top end of the market, as opposed to some of the other ones. Tiffany went down market and earned a lot of money in the middle market, came under a lot of pressure. But in the last recession, I mean, you saw trillions and trillions of wealth wiped out in the global financial crisis. Sales took a dip. There was some concern about flashing your wealth for a moment, and then the sales came right back. I mean, the reality is that these purchases are immaterial for a large portion of their customer base.
And that's the defensive nature then of Richemont. At a discount at $90, is it cheap enough?
I'd say it's cheap enough. I think it's good value to go in at this present moment at the prices that it sits on. But what is also important, Bruce, to also add in there to assist my friend here with this particular stock is their growth strategy. I mean, we saw that everybody now in the luxury goods market is going back and purchasing, and they're actually producing more. If you think about Ferrari and Porsche right now, the guys are actually now producing more. They're looking for more plants to actually produce more.
What we're not seeing, though, in the luxury goods space is merger and acquisition activity. There doesn't seem to be that much. The groups seem to be consolidated. The luxury brands are well housed. Do we see an SAB Miller, Anheuser-Busch, InBev type standoff amongst the luxury goods producers at some time? Can a Gucci, for example, buy a Richemont at some point in the future?
Yeah, it would have to be a takeover target more likely than the other way around. They want to sell a couple of those marginal brands, which are small part earnings, but I don't see them going out and buying somebody else because they really want to stay at the top end with the extreme luxury. But someone could come after them.
Yeah, I suspect they could, which is ultimately good for shareholders. You like it enough, Clive?
I do like it, and I do like the fact that they don't want to dilute by buying or getting involved in a merger. So that's why they keep being the brand that they are, because they're so well positioned. So that I like that particular stock.
Richemont gets the thumbs up. Then, Clive, let's go to you for your final pick. Oh dear, I think it's going to get blasted. But let's go for it anyway. The valuation is right. It's at 6 times last year's earnings. So the share price has plummeted from around $600 to current levels. 30 seconds, Kumba Iron Ore.
Kumba Iron Ore, I'm going short.
You're going short? I beg your pardon.
So you've got KIO, and I'm removing the I and leaving the KO because I think they're not that. The problem we've got now is the China slowdown. The demand has not been that great, and it's not been great even in the local market as well. So they're starting to struggle a lot. And I'm worried the fact that with alternatives being available, will iron ore continue to be the real resource of the mineral that people continue to consume? Maybe not. I don't know. But I think there's alternatives there that people are looking into, and I'm not liking Kumba at the current moment.
Okay, there we go. I mean, the right time to have shorted this, Mathew Warren, would have been in January. But no, Clive Ramathibela-Smith gets up a little late in the mornings, doesn't he? It's now October, and he decides he wants to short the biggest faller on the JSE during 2014. Is that wise?
I'm not going to jump on board with the short per se, but Kumba has a lot of problems. I mean, despite having a low cost base of minerals, you see cost inflation, you see stripping ratio problems compared to their peers. It keeps costing them more and more every year. They're losing their cost advantage in a global context. There's a problem there.
Yeah, you don't like the business, but you're not going to short it.
No, I don't know where the metal price is going next, so that's what scares me away from shorting or going long.
I want to step down as you shoot down his short. Anyway, so you're shooting it down. Clive Ramathibela-Smith, your Kumba Iron Ore short is shot down. K-Live wants the 4th spot. Shootout wants more than 3 points. He really does want more than 3 points. So be it a tweet or a retweet, as long as it's got a hashtag, we will take it as a vote. So you go onto @SSO League, use the hashtag either KLive or hashtag Shytown, and vote for one of these handsome one of these two guys. We'll be counting those votes until midnight on Sunday. Then it's match day 26, when the one will take on the good guy right here on CNBC Africa, 8:30 on Tuesday. We've got loads of fabulous scraps and bare knuckle fights before we crown the winner of the most vicious and unrelenting stock picking show on television. Till next week, do stay cunning. Good night.